I'm Lunette the Clown, and this is my doll, Molly. Come watch us on the big, comfy couch. What's that, Molly? Oh, right. Molly wants to invite you to Granny's new Cabbage Club cooking school and Major Bedhead's new dojo and dancing school. We're gonna have so much fun. See you on the big, comfy couch. My dog can read. Jump! My dog can read. Eat! My dog can read too. Run! He's a good reader.
Tune in for Wishbone.
All right, this is it. I am a dog on a mission. Watch me, boys. Follow my lead.
Okay, Wishbone, we'll be able to see what you see.
Do I look cool? I'm Cyberdog, canine candid camera against crime. Looks dangerous. You go first. Did I hear you say meatloaf?
Hi, I'm Mel Wagoner. If you're 70 and a half or older and you've got an IRA, I've got great news. A new federal law allows you to make charitable contributions from your IRA without penalty. And these tax-free gifts also count towards your mandatory withdrawals. This is a great way to support the OPB programs you love. Great shows like Nightly Business Report, Nova, and Masterpiece Theater. Like to learn more? Well, give me a call at 503-293-1935 to get this informative brochure. I'd love to hear from you, and thanks from OPB.
When you remove the hype, the entertainment, the predatory stakeouts, the invasions of privacy, the talk show shouting, and the blurring of lines between news and opinion, what you have is the most important news of the day.
Good evening, I'm Jim Lara. On the News Hour tonight,
next time on Nature, where two oceans meet, a remarkable family of predators gathers. They come for the sea's bounty and take their fill. This water is their land. It's Sharkland.
Join us Sunday at 8 p.m.
Yahoo and Microsoft could be playing Let's Make a Deal. The speculation sent Yahoo shares zooming, but by the end of a wild day of trading, merger talks appeared out while a strategic partnership took center stage.
Another financial data powerhouse could be changing hands. Reuters could be the target of a $5 billion buyout. We'll tell you who appears to be interested in the British firm.
Tonight's Market Monitor guest says despite the blue chips' recent push into record territory, there's still plenty of value left in the market. He's Carl Marker of the IMS Capital Value Fund.
Then MasterCard says it's not bothered by its rivals' plans to go public. We'll talk about the competition with MasterCard CEO Robert Sealander.
I'm Paul Kangas.
And I'm Suzanne Pratt. Susie Garib is on assignment. This is Nightly Business Report for Friday, May 4th.
Nightly Business Report is made possible by
A.G. Edwards. Objective financial advice can help make sure your nest egg is ready when retirement arrives. A.G. Edwards, fully invested in our clients.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. Yahoo shares rose almost 10% today following news reports that Yahoo and Microsoft were talking about joining forces to better compete with Google. Late today, the Wall Street Journal reported merger talks between the two were no longer active, but the companies may still explore other ways of working together. Microsoft is looking to minimize competition from Google, and analysts say a joint venture with Yahoo may be the way to go. Darren Shervitz is the director of research at the Jacob Internet Fund, which owns about $4 million of Yahoo shares. He says a partnership between Microsoft and Yahoo isn't feasible.
This is a case somewhat of the enemy of my enemy is my friend, but in the long run, if you combine these two cultures, it's just not going to work. And I know this is something that, again, theoretically makes a ton of sense. It's just practically, I don't think it's going to be likely to happen.
Shervitz adds that Yahoo would be better off focusing on the web-based media business it has built already and making those assets more valuable.
Takeover speculation also stirred interest in the media sector today for the second time this week. Today's talk was of a deal combining Thomson of Canada with Reuters of Britain to create what would be the world's largest provider of financial data. Scott Gervey reports.
First Dow Jones, now Reuters. The 156-year-old British news agency and supplier of financial information and services said today it has been approached by a company which may make an offer. Reuters said, quote, "There is no certainty an offer will be made or necessary approvals, including those required under Reuters' constitution, will be received." Rumors on the street named Thomson, the Canadian company with operational headquarters in Stamford, Connecticut, as the potential suitor. The Thomson Financial Division is also a major supplier of financial data and services and includes the well-known First Call Group, which tracks corporate earnings forecasts and reports. Earlier this week, Wall Street Journal owner Dow Jones received an unsolicited $5 billion buyout offer from Rupert Murdoch's News Corp. Tuna Amobi, media analyst at Standard & Poor's, says these bids prove the value of the financial news audience.
Today's announcement of Thomson going after Reuters kind of somewhat reinforces perhaps the attractiveness of the audience that financial publishers like Dow Jones and Reuters go after. I think that you could argue that those publishers are in the sweetest spot of the newspaper industry.
Reuters shares rose more than 25% in trading today, giving the company a market cap of about $15 billion. Unlike Dow Jones, the big revenue driver for Reuters is its professional trading terminals. The Reuters news organization supplements its market information and analytical tools. Like Dow Jones, which is controlled by members of the Bancroft family, there is a Reuters Foundation, which can veto any deal. Reuters also has a corporate constitution, which prohibits anyone from owning more than 15% of the company. Dow Jones says the Bancroft family opposes the News Corp offer, but late today, the Financial Times of London reported Reuters is inclined to recommend a Thomson deal. A combined Reuters and Thomson would have a bigger share of the world's market data business than Bloomberg, the current industry leader. Scott Gervey, Nightly Business Report, New York.
On the economic front today, word that U.S. job growth fell to its lowest level in more than 2 years in April. At the same time, the nation's unemployment rate edged up to 4.5%. Stephanie Du examines what the data means for the Federal Reserve and interest rates.
The housing slowdown showed up in the April employment report, with fewer jobs created in the financial services industry, and slower consumer spending put the brakes on retail hiring. Economist Catherine Kobe says the hiring slowdown is consistent with a soft landing for the economy.
We are seeing, certainly from the first quarter numbers, that the economy is softening, and I don't think anybody expects a recession still, but we are talking about a pretty soft economy for the first half of the year.
Non-farm payrolls increased 88,000 in April, the smallest gain since November of 2004, after a gain of 177,000 jobs in March. The unemployment rate rose slightly from 4.4 to 4.5%. Economists were surprised that losses weren't greater in the construction business. So far this year, construction job growth has been flat after averaging about 11,000 new jobs a month last year. The Contractors Association economist Ken Simonson says weakness in new home building has been offset by strength in commercial building.
Non-residential building and specialty trades and heavy and civil engineering employment, which is mainly highway construction, that's up 2.8%, or double the rate of overall job growth.
Lehman Brothers economist Drew Mattis has another explanation.
The construction field has a number of illegal immigrants, or a higher percentage of illegal immigrants than other fields. And so it could just be that essentially the gray market for labor is absorbing the job cuts in the construction industry right now.
But despite the weaker jobs outlook, economists expect the Fed to hold interest rates steady at 5.25% when it meets next week.
So from the Fed's point of view, the last 3 months have actually shown more job gains than is necessary in order to keep the unemployment rate unchanged. And they're still worried about inflation, and we don't suspect that this report has changed anything on that front.
Economists say wages would have to cool off a lot more and unemployment would have to creep up for the Fed to cut interest rates. Stephanie Dew, Nightly Business Report, Washington.
Wall Street took that weaker than expected jobs report as anti-inflationary, while the takeover talk about Yahoo and Reuters gave stocks a boost as well. At 11 a.m., the Dow was up 37 points. NASDAQ posted a 12-point gain. After a midday slump, stocks firmed up again as interest rates and oil prices moved lower. While normal pre-weekend caution kept the gains modest, the blue chips still ended at record highs for the fourth straight day. The Dow Industrial Average closed up 23.24 points at a record 13,264.62. This week it rose in 4 of the 5 sessions for a net gain of 143.68 points. The NASDAQ Composite advanced 6.69 to 2572.15 today. It also rose in 4 of this week's 5 days, gaining 14.94 points overall. The Standard & Poor's 500 index was up 3.23, ending at 1505.62 today. In the bond market, the 10-year note rose 10 seconds to 99 and 27 seconds, putting the yield down to 4.64%.
Bank of America is suing ABN AMRO in an effort to keep alive a $21 billion deal to buy ABN's LaSalle Bank. Bank of America wants an injunction blocking the sale of LaSalle to anyone else. B of A is also seeking unspecified monetary damages. The suit comes just one day after a Dutch court barred ABN AMRO from selling Chicago-based LaSalle without shareholder approval. The sale of LaSalle is key to Barclays' $90 billion takeover bid for ABN AMRO. ABN AMRO shareholders want the company's board to consider a larger rival offer from an investment group led by the Royal Bank of Scotland.
While today's employment report may point to a slowing economy, business at MasterCard remains strong. The nation's second largest credit card brand reported a 70% jump in first quarter profits this week. NBR's Jeff Yasteen talked with CEO and President Robert Sealander today and began by asking how a potential slowdown in consumer spending would impact the credit card company's business.
Ultimately, consumer spending obviously affects our results because if people just stop spending, then we're not going to see the volumes of transactions on our cards that we would normally see. However, we're in an industry where the migration from cash and paper-based payments, checks, to electronic and card-based is really the dominant force. Today, there are probably $80 trillion in paper-based payments being done, cash and checks around the world. Last year, we did about $2 trillion. Fortunately, the underlying economies of the world have been pretty strong. Consumer spending has been pretty good, and so we're getting the benefit of both.
Let's talk about growth for a second. Overseas growth represents a very large constituent to your earnings growth, and as I understand it, represents the most rapidly growing aspect of MasterCard's growth.
Yeah, that's correct. If you take a look at our first quarter results, we had strong growth globally. Here in the United States, we measure our dollar volume of spending growth, and that was quite strong here. So we saw 16+% growth globally. We had about 16% here in the United States. However, there are some markets overseas where we're seeing explosive growth. I mentioned Latin America just a moment ago at 24%. South Asia, Middle East, Africa grew 47%. in the first quarter of this year compared with last year. So we're very fortunate in the 40 years that we've been in business. We've managed to position ourselves around the world. We have 40 offices. We do business in 200 countries and territories. And right now we're seeing more rapid growth outside of the U.S. And I expect over the longer term future that will continue and will benefit from the investments we've made overseas in the past.
Now, as MasterCard keeps its flag waving as far as making sure consumers and merchants are aware of the brand, of course, now we see Visa. They've got an IPO that will be coming out soon. And Morgan Stanley's talking about spinning off Discover Card. Correct. So now you're faced with two longtime competitors, but with much larger bundles of cash that presumably they're going to also put into the competitive environment. How does that change the game with these two companies having larger access to the capital markets versus the previous structures that existed before?
Right. I think you're right. I think it will be game changing, but I think that's over the medium to longer term. And we're more focused, I'd say, on the sort of immediate next few quarters, give us a couple of years. I think it's potentially very distracting. We went through this process, and we started this back in 2002 when we merged a European business that we didn't wholly own with MasterCard. And at that time, we became a stock company. We became an SEC registrant. We've been through the process of Sarbanes-Oxley compliance and 404. And then, of course, last May, coming up almost on the, I guess, anniversary this week.
Of the IPO.
At the end of the month, the IPO. So we've been through a lot, and that's in our rearview mirror. That's behind us. And so we set a standard, I think, for the industry, and we see others now following that. What I'm hoping for is that it's immensely distracting.
For your competitors, for Visa, for Discover.
Exactly, and that gives us the opportunity to do better jobs with our customers, to do a better job in the marketplace, and to put even better results up on the scoreboard.
Mr. Seelander, thanks for your time.
Well, it was nice being with you, Jeff.
Our guest, Robert Seelander, President and CEO of MasterCard. Now let's take a look at some stocks in the news tonight. The most active New York exchange issue on 20.2 million shares, Motorola edging up 35 cents. Motorola's annual meeting is next Monday. Today, Carl Icahn, who's vying for a board seat, said that if CEO Ed Zander doesn't turn the company around this year, he will seek the resignation of Mr. Zander. Pfizer, second in volume, was up 21 cents, followed by GE with a 19-cent loss. AT&T moved up 58 cents. Time Warner, 24-cent gain there. Coeur d'Alene down 7 cents. Yesterday, as we reported, the company announced plans to buy two Mexican gold and silver mining companies for stock. A lot of stock, 271 million Coeur d'Alene shares. Micron Technology, 52-cent gain. ExxonMobil down 13 cents. Citigroup edged up 14 cents. And then Ford Motor, a 3-cent gainer. Eastman Kodak fell $1.25. First quarter earnings, or I should say results, excluding one-time items, a loss of 35 cents a share. The street was only looking for a loss of about a nickel a share. On top of that, Kodak cut its 2007 forecast. Dun & Bradstreet moving up $4.22. First quarter earnings moved up to 98 cents from 81 a year ago, 2 cents above the street estimate. Revenues were up a respectable 6.8%. And then Weyerhaeuser, a $4.47 gain, $4.47 gain. First quarter earnings 20 cents down from 92 last year and 11 cents below the street estimate. Revenues dropped 13%. The only positive I saw is that the company is considering the sale of its container board division. That might have helped the stock today. Electronic Data Systems down $1.96. First quarter adjusted earnings 31 cents versus a nickel last year, but sales were lower than expected. Standard & Poor's cut earnings estimates. WMS Industries, which makes game machines, up $4.16. After the close yesterday, third quarter earnings up 40% to 34 cents a share versus 26 a year ago, and today Prudential upgraded the stock from neutral to an overweight rating. Baldor Electric, which makes electric motors, up $4.18. First quarter earnings 50 cents up from 34 last year, 13 cents above the street consensus.
Nice move in the stock. Assured Guarantee Limited up $2.26. First quarter earnings there nicely higher, 57 cents versus 47 a year ago. And today Standard & Poor's upgraded it from hold to a strong buy. Little follow through on yesterday's hot initial public offering. Acorn International, it was up $6 yesterday, up another $4.19 today. It's a Chinese TV home shopping company. Yahoo topped the active list on NASDAQ, traded as high as $33.61 today on that takeover talk by Microsoft. Microsoft itself down 41 cents. Google fell $2.11. Apple 41-cent gain. And then Cisco 21-cent gain there. Intel moved up 16 cents, but Sears Holdings off $8.56. Company said first quarter earnings will be $1.03 to $1.26. The street estimate is up there at $1.46. Dendrion up 91 cents on the close, but traded as high as $21.81. The company has a promising prostate cancer treatment. And then Amazon.com up $1.04. Crocs up $11.44. The maker of unusual shoes had first quarter earnings of 61 cents, up from 17 cents a year ago, and that was 12 cents better than the street was expecting. And those are the stocks in the news tonight. Suzanne?
Thousands of shareholders are headed to Omaha, Nebraska this weekend for Berkshire Hathaway's annual meeting. Once there, they'll hear from the company's legendary leader, billionaire investor Warren Buffett. NBR's Susie Garib is in Omaha. We'll bring you her report on Monday. As a run-up to the meeting late today, Berkshire Hathaway issued its latest quarterly earnings. The conglomerate made $2.6 billion, or $1,682 per Class A share. The results came on a $10 billion jump in revenues to $32.9 billion. Berkshire credits an 82% jump in operating earnings at its Geico insurance subsidiary for the gains.
Also Monday, a recession, modest growth, or an economic rebound. We'll look at which forecast is most likely.
Here's a look at what's happening next week. Our Friday Market Monitor guest is Douglas Jimerson, editor and publisher of National Trendlines. On the economic calendar, Tuesday, it's March wholesale inventories. Wednesday, the Federal Reserve's Open Market Committee meets on interest rates, and we'll see the weekly crude oil and gasoline inventories. Thursday, weekly jobless claims, March international trade, and April import prices are out. And Friday, April PPI and retail sales are released, along with March business inventories.
My guest market monitor this week is Carl Marker, Chief Portfolio Manager of the IMS Capital Value Fund based in Portland, Oregon. Carl, it's been several years, but it's great to see you again, and welcome back to Nightly Business Report.
It's good to be here, Paul.
Your investment strategy is to seek value, but in a market which has been setting new record highs almost every day recently, are you still finding stocks that are reasonably valued?
Absolutely. It's a stock picker's market, and we're able to find single-digit PE stocks, undervalued stocks. You just have to be able to know where to look.
And they're under a strong platform of a bull market, but do you think this bull market still has a way to go?
I think it's possible it'll correct this summer before it finishes the year strong, but I think there's plenty of room in this bull left.
Do you think that the higher the market goes, the worse the stumble will be when it comes?
Well, that's always the case, but we spent the last 5 years going pretty much nowhere, so I still think it's going to be a long time before we're overvalued again.
What, in your opinion, would bring this market down? What would make you bearish?
It would have to be a drop-off in corporate earnings or a major slowdown in the economy, which neither is the case right now.
Okay. Give us some performance figures on your IMS Capital Fund over recent times.
Well, so far this year, the fund is up 10.3%, and the S&P 500 index is up about 5.9%.
So you're doing very nicely in this atmosphere.
Yeah, and since the last interview, it's up 45%, and the S&P about 39%. So
that's something to be proud of. I think you should get some nice compliment on that.
Thank you.
Can you give our viewers some stocks you believe are worth buying now, some value stocks?
Well, yeah, I want to first mention that I don't own any individual stocks. I invest strictly in our funds, but I'll give you some ideas that may work out.
These following stocks are in your funds or will be?
Absolutely, yeah.
Okay.
These are holdings in our fund.
Number one.
The first one is YRC Worldwide.
This is a combination of Yellow Freight and Roadway. This is the merged company?
Correct. This is the largest long-haul trucking company in the U.S. So if you think that oil prices are eventually going to go down, this company would benefit. They also benefit from a stronger economy. And when our target price is 80, the stock's trading about 39, and it has a single-digit PE of only 9 times trailing earnings.
That chart shows that it's been a kind of a bumpy ride for the stock, but you think it's in an uptrend now.
Yeah, it's been bumpy because the economy's been a little sluggish and the oil prices have been rising, which doesn't help this company at the moment.
Okay, interesting. How about another choice?
Well, we like Omnivision Technologies. It's a company that makes the camera phone chips, the camera chip. And right now they're coming out with a new product, a 3-megapixel chip that right now most of the phones are 1 megapixel. So
why is the stock down so sharply?
they had an earnings disappointment a little while ago that they're still recovering from, but I think that there's been some takeover speculation from Kodak, and they've got a new product coming out. I think the momentum's positive.
Okay, how about a number 3 choice?
Well, that would be Del Monte Foods, and this is not fresh Del Monte. This is the company that makes dry foods and canned foods, and they've had strong earnings. Our price target is 20. Stock's trading around 12.
Okay, very good. Anything else?
Well, the last one on the list is Bosch & Lomb. It's a little bit controversial because they've had a product recall, but there's also been some speculation that they're going to be taken over, and we think they're undervalued at about 16 times next year's earnings. They're going to benefit from the aging demographics of the U.S. population.
Do you own any of the stocks you've recommended here? They're just in your fund, but you don't own them personally?
Exactly. I only own our funds. I don't own any individual stocks.
Okay, very interesting. Nice choice of stocks.
Thanks, Paul.
Very interesting. Thank you for sharing your views with us once again.
Thanks for having me.
My guest, Carl Marker, Chief Portfolio Manager of the IMS Capital Value Fund.
Recapping today's market action, takeover talk powers the Dow higher. The blue chips gained 23 points to another new high, and the NASDAQ gained 6. To learn more about the stories in tonight's broadcast, to watch our streaming video, and to take part in our daily blog, go to Nightly Business Report on PBS.org. You can also email us at nbr@pbs.org. That's Nightly Business Report for Friday, May 4th. I'm Suzanne Pratt. Good night, everyone, and have a good weekend. You too, Paul.
And you as well, Suzanne. I'm Paul Kangas, wishing all of you the best of goodbye.
Nightly Business Report is made possible by
Franklin Templeton Investments. Our unique perspective helps us see domestic and international markets in a different light. Franklin Templeton Investments. Gain from our perspective.
A.G. Edwards. Objective financial advice can help you build a better nest egg. A.G. Edwards, fully invested in our clients.
This program was made possible by